Yeah, I mean, I guess you're always looking at, both sides. What are the pros and cons that the founder has? I'd say in terms of like maybe red flags that we typically look for, or that I've noticed a lot. There's probably a few that come to mind. Like one, how scalable is your growth, right? Have you figured out the problem well enough that you know one, who to target, and then two, how to get in front of those customers. There's a lot of times that people have a really great solution, but getting the first few customers is easy because maybe they already have those personal connections, but how do you kind of get past those first few customers, right? So having scalable growth is a huge one.
Hi, everyone, and welcome. We are joined today by Kayon Moshiri, investor at Plug and Play Ventures.
Hi,
Well,
everyone.
great to have you. It's really excited to have you. The number of kind of great topics to jump into, but let's start off with a softball question. Why don't you tell us a little bit about yourself? What did your professional journey look like, and how did it lead you to the venture capital space?
Awesome. Yeah, totally. Ed, thanks again for having me. I'd say my journey was like very, very focused on venture capital toward before getting into plug and play. So I kind of had like that part of my MO very early on. But I think it's pretty interesting. So I was really just into tech and startups even in high school. Originally thought I wanted to get into like video game development and that kind of thing, and that kind of led me down the path of just learning more about the different tech out there. And so my first foray was really doing just an internship in high school with a startup in my hometown. I grew up in a small town. There was probably two startups total. So I didn't really have much of a choice on like the type of industry I was getting into, but I didn't really care at that time. Basically ended up doing some work with an A/B testing startup at the time, just learning about tech and everything about A/B testing, which was a whole new world for me. And then fast forward, kind of going into college, went to UCLA, and very quickly just started trying to find out any way I could get involved into entrepreneurship while I was there. So did a few more internships with for example, like a pitch deck making startup. So learned everything about creating, a nice looking pitch deck, what to include, what not to include. Um, right after that, ended up working with like a youth sports startup called League Side, which basically was a platform for helping a lot of youth sports leagues secure sponsorship from different brands. Um, and then a few other things. Worked quick, like very briefly in private equity as an intern too, and very quickly realized I wanted to go earlier stage than that. I think it's a lot of fun to work with companies that have a lot of data that you can kind of pry into, but at the same time, at being at the cutting edge for me, there's not many things as exciting as that. And so yeah, anyways, I did a lot of work kind of with early stage VCs as well. So I did a few projects with like Sierra Ventures, Sway Ventures. At that time, I didn't really know what VC was. I probably learned about it like the first few months into college. And what happened was I'd like met one of these clubs on campus called Bruin Ventures, and they explained to me what venture capital was, and I was like, this is a great way for me to just like see what's out there, because before I was kind of like going in blind, just picking out startups that I wanted to work for, and not necessarily knowing what industries were exciting for me, where I thought I could add some value. And so yeah, that club really introduced me to the entire world and doing tons of different projects with startups and VC firms. And yeah, ended up running for the last 2 years at a university, like the Startup Labs Accelerator program at UCLA, which was like for pre-seed or like pre-seed startups, like not even funded. Um, and you learn a lot working with startups that are one, not funded, and a lot of them don't even have a product yet. They just kind of have an idea, and helping them build that from scratch. Um, did a lot of work with them over the course of 2 years, roughly working with like 30 different startups. Um, and yeah, essentially realizing I loved accelerator programs too. So one thing led to another. I learned about plug and play through a friend that was working with them at a university. and they were launching an office in LA at the time. So I will admit it was kind of like a right place, right time moment as well. Um, there's not too many openings, as you probably know, in venture capital. So that helped a lot too. But they launched the office. I kind of joined in as an intern initially. Um, did a ton of hard work that first few months to kind of prove out that this was what I wanted to do full time. And then now I'm helping run all types of things within Plug and Play. So helping with the accelerator side, helping with the investments, especially within retail and commerce, and a lot of LA-based startups as well. So that's hopefully as brief as I can get with the background, but hopefully
Yeah.
that gives you some good context.
No, that's really awesome. And you kind of touched upon a couple of things that makes Plug and Play a unique investor in the startup ecosystem. For those that might be less familiar, can you tell us a little bit more about Plug and Play and Plug and Play Venture and kind of what makes them unique, what makes you and the firm unique?
Yeah. The way I like to kind of describe it is there's really two sides of our venture capital firm. So on one end is our typical investment structure. We actually have two different types of funnels that we invest out of. So we have an angel, or sorry, like a family office that we do investments out of, typically smaller checks there. And then we have typical like structured funds with LPs, where we do slightly larger checks, like all the way up to 1 million. Really depends on the type of startup that we're working with, but the component that makes us really unique is the other half of our business, which is our kind of corporate network or corporate partnerships. So we have 26 different verticals that we invest in. Within each one of those verticals, we have a handful of corporate partners um, that buy in to basically have Plug and Play act as a driving force for their innovation. So we work with tons of different interesting brands, including things like companies like Chick-fil-A, Red Bull. We work directly with their innovation teams to like basically on a weekly basis learn about what problems that they're having internally, what problems they're having with customers, and helping them be really collaborative with startups, right? We talk to so many startups on a daily basis that there's a lot of them that can solve these problems directly and hopefully save them a lot of time from having to develop these solutions internally. So we just try to be that dot connector most of the time, and obviously it's helpful for our portfolio companies. The corporations get to move a lot quicker, and we just kind of help facilitate those introductions that help them move things along a lot faster than they would otherwise.
Yeah, no, that's awesome. I mean, I definitely am familiar like with plug and play, also some of those other specific verticals like, like sports, and then also looking at, going even international. So really the breadth of what your firm does is quite immense.
Yeah.
You,
Yeah, I guess I didn't touch on that at all, but there's 60 different offices. So I'm a small piece of the puzzle when it comes to all the other, the offices in Europe, Southeast Asia,
yeah.
that are doing the same thing.
You touched upon, two areas of interest for you, which is retail and commerce. Can you speak a little bit more about that? What excites you about retail and commerce in particular?
Um, I mean, I think being in LA, there's a unique perspective because we see so many emerging brands in LA. I think an extension of that is the creator economy too. I think there's just a lot of opportunity in terms of how advertising is helping subsidize a lot of these channels that, previously you might have had to pay monthly subscriptions for, that, now advertising technology is making it much more affordable for people to get their hands on new technology. Um, I like to say too, like for me, AI is a really exciting space to be in, but I also look at the other half of the industry, which is all of the components that might get maybe displaced by AI, and how can different industries get empowered through real people as well. So I like to tell people, like, for example, creator economy is a really exciting avenue in that space because it's essentially giving humans the ability to reach other humans in a more authentic way. And I feel like same with sports tech, right? Like the opportunity to see real people playing a game, like those types of things are never going to get replaced by AI, in my opinion. And so I like to kind of highlight those types of opportunities too, because I think right now there's a huge emphasis on all the technology with AI, which is really exciting. But I do think within retail and advertising too, like people really value those human connections and that authenticity. And I think that's an area where we're really trying to make sure we don't shy away from as well.
Yeah. I mean, really on a similar vein, what have founders then in the retail and commerce space, what have they been doing differently that's impressed you recently?
Yeah. I mean, it's interesting. There's always like new types of strategies that founders are using to maybe fundraise quicker. It's there's one example that comes to mind. Like most recently, we were talking to a founder that essentially had two different term sheets. There was one term sheet that we were going to basically sign on for, and then there was a second term sheet that was essentially saying the valuation was going to get bumped up to roughly 40-50% extra
Hmm.
if he hit certain KPIs within the next like 6 months. Um, I haven't seen that before. I think that's kind of a newer strategy. To be honest, I don't know if that's the right way to go about it. We were kind of we had to like take a few days to be like, is this normal? Have we seen this before? But I think it's an interesting one because it holds the founders accountable for what they're saying they're going to accomplish in the next 6 to 12 months because I'm sure you've seen too how many times startups have these projections that are like best case scenario, they're not hitting them by the end of the year. And you're like, I guess we kind of expected that to happen, but like, that's why when I see projections on most startup decks, it means almost nothing unless you have something like this where now the terms are going to change depending on what metrics you're able to hit. And it kind of prevents a lot of that like fake it till you'll make it energy. Like now it's very, very tangible, and the reward if you're able to accomplish those is kind of a win-win on both ends.
Yeah, actually having to actually kind of deliver now and actually have to kind of show the actual performance that you say that you're going to deliver. So then on that though, then when you're looking at companies that you're looking to potentially invest in or those that you've invested in over the last couple of years, what are some of the most important things that you look for, before even kind of considering whether to invest or not?
Um, yeah, I mean, I guess you're always looking at, both sides. What are the pros and cons that the founder has? I'd say on in terms of like maybe red flags that we typically look for,
Hmm.
or that I've like noticed a lot. There's probably a few that come to mind. Like one, how scalable is your growth, right? Have you figured out the problem well enough that you know one, who to target, and then two, how to get in front of those customers. There's a lot of times that people have a really great solution, but getting the first few customers is easy because maybe they already have those personal connections, but how do you kind of get past those first few customers, right? So having scalable growth is a huge one. Um, and that way we know if we put money in, you're going to hire a sales team, a dev team, whatever it is, that's going to basically unlock that growth. The other one is also just like founder background, right? So are they a solo founder or are there two or three founders? I'd say most of the time we aren't investing in solo founders because there's a lot of uncertainty around, maybe for example that their managerial style is very poor too, right? So are you putting all your eggs into one basket that isn't going to have a team that stays around more than a year? Um, and are they going to hold themselves accountable for certain KPIs too? Another one is just committing. This is unfortunate, but I see a lot of founders that commit way too much time and money into an idea that clearly isn't working. And so just being able to take a step back, acknowledge if something isn't working. I'm not saying necessarily, give it up, but, try to pivot, try to find something else that works because hard work only goes so far. And at the same time, trying to get investors to come on board isn't going to change if you're pitching the same thing over and over again. Um, so yeah, I think also easy things to note, like fundraising too late is typically a red flag for us. So, if there's not enough runway, 3 to 4 months, it just makes
Oh,
it hard for us to feel like we aren't just a last last ditch effort to stay alive.
yeah.
And then I'd say like most of the time our deals get killed is something coming down to the term sheet. A lot of the time, maybe the founder has given up too much equity early on. Generally, we want to see like above 50% at the seed stage. So that's one thing. Maybe not having a fair equity split among the co-founders typically is kind of a red flag.
Mm,
But yeah, those, I mean, I know those are a few points, but hopefully
yeah.
it's helpful too.
No, that's really helpful. I think, and I'm actually curious now that you're kind of talking about some of the red flags and you're talking about some of the things also that founders do well and that have impressed you just in the fundraising process. You know, the macro environment has been changing. It's been evolving very, very rapidly. And, as the macro conditions have changed or evolved, how have you found founders engaging with you and investors in general? And how have you kind of, adapted to those macro conditions when talking to and engaging with founders?
Yeah, I think it's pretty interesting because there's this push and pull between founders and investors. Uh,
Mm,
and depending on the macro environment, it changes whether or not the investor has to push or pull more. So right now, I'd say we're like definitely on an upward trajectory in terms of investor excitement. AI has been a big push for that. And I feel like we haven't really seen this level of investment, at least just using the eye test, since like 2021, right out of COVID. There was like when I first joined Plug and Play, I joined in 2022. It was definitely more of a dip. I think shortly after that, like early 2023, when all the layoffs were happening in the tech scene, um, crypto was like crashing again at that time too. And so all of the Web3 companies that I had talked to a year ago were non-existent. Um, and at that time, it was very much like inbound, just managing inbound, a ton of founders reaching out, um, trying to just find enough time on your calendar to basically meet with all of them. Now it's starting to go the other way where it's really a lot of deals are closing quickly. Founders are raising capital extremely fast at pretty favorable terms. Um, and so now it's much more of a hustle and try to find those deals moment, which I think is a much better position to be in versus trying to figure out who's funding out of desperation versus who's really got something interesting on their hands. Um, but yeah, I think right now it's definitely an exciting time. Regardless of whether it's an AI startup or not, I think there's a lot of really cool companies out there that aren't necessarily in the AI space, but they've been able to ride that wave as well.
got it. So, in addition to providing funding, investors also play a role as a mentor as well as a partner for their portfolio companies and the founders of those portfolio companies. What do you believe is the key match or the key success, a good successful match between an investor and a founder, making that kind of connection and that kind of mentor-mentee type of bond?
I mean, I guess it depends on the VC firm and the person, right? But for me, I just want to work. I like want to invest in people that I want to work with, as if I was hiring them. Like, and for me, the biggest thing is like, how approachable are you? How humble are you as well? Like, I want someone that's confident, but I also want someone that can take advice. And that doesn't necessarily mean implementing all the advice I give, because just like any other VC, like we have a lot of ideas, and probably 9 times out of 10, they're not the right route, right? But it's a matter of like being open to taking that feedback. I've met lots of founders that are extremely successful, but we would never do an investment with because they're just difficult to work with, right? And some VCs are very, very hands off, and it doesn't really matter as much. For Plug and Play, we're a strategic investor, so a big part of our job is making connections, introducing startups to potential customers, other VCs in our network, um, and that means that we're going to make a lot of introductions. And in full transparency, not all of them are going to, translate into a contract, right? And so some founders are going to be extremely picky about what they do and who they work with and where they spend their time. And we just that's great for them, but we want to work with a founder that is like willing to take introductions and be open to the opportunities that we want to provide for them. Not working with us here and there is like totally fine, right? But like we want to work with people that have that optimism to be collaborative, take advice, and do what they want with it, but at least be open to that conversation.
So, we're talking about kind of the founder and kind of their approach. Some founders start their company from a desire to make an impact or spark change in the world. Do you feel that VCs have the ability to make social impact? Do you think there's a responsibility for VCs to make a social impact?
Um, I think responsibility to make a social impact, unfortunately, probably not all the time. But I do think when you peel back the curtain and you're working with these VCs, everyone's human at the end of the day. No one feels good about making an investment in a company that is going to be detrimental to society. So I think even if it isn't like clearly in that mission statement, right? Like most people are human. If you've made it this far in life and you want to be like helping, the next wave of entrepreneurs grow, I'd say like just wanting to do that in the first place means that you have some type of like excitement toward what humanity can bring. So I don't think so. I will say the definition of that change, like making that change in humanity, d varies for many people. Um, you know, like for example, we were looking at an investment opportunity recently around um, basically an alternative to I forget what they're called, like whatever Zins are, the nicotine pouches.
Right, right, right.
And like, some VC firms will look at that as like, we don't want to invest in products that are addictive. And then another VC firm will look at that as, well, it's helping people quit smoking and vaping, right?
Mhm.
So we're actually getting closer to an ideal situation there. So I think that's where the nuance is with a lot of these investment targets.
Yeah, it's actually interesting. I mean, this debate is definitely increasing with AI and the mass adoption of AI. So obviously, you've already started to kind of touch upon some of the, the impact that AI is having, definitely in that retail commerce space as well. What about AI startups, though, have been exciting you? Has been really, have been really interesting for you over the last year or so.
Yeah, I there's a lot to unpack there. Like what comes to mind initially is the infrastructure around AI monetization. So obviously when ChatGPT first started blowing up, shortly after there was a lot of lawsuits from New York Times and other outlets around the use of that AI and how it was trained. Um, I think it's pretty exciting now to see that there are startups working to solve that problem and basically help authors, help digital creators get monetized for their likeness, for having that data sold. Um, right now H&M just uh, just like launched some new models that were all AI generated. And there's like a few ways to look at that. On one end, it's like, well, now are we replacing models in the industry for these AI images? But at the same time, these models were compensated for their likeness, and they kind of signed up for that to happen. Um, it's kind of a wait and see. I still don't know. I think where I stand on that morality issue changes by the day because I want them to be
Yeah.
compensated at least if they are, and they are signing up for that. But at the same time, is it because they don't really have any other option? And that's still, I think, hard to gauge.
So then on the other side of it, what are some of the challenges you're seeing with startups that are specifically focused on AI?
You mean in terms of like getting off, like going to market or
Everything from going to market to meeting expectations of customers and their investors, beyond the technology itself, even like what are some of the things that you're starting to see? I think you've touched upon, even the questions of compensation and making sure that, authors and other creators are fairly kind of compensated and so on. I'm just kind of curious, is there any kind of specific challenges you're seeing from an investor's perspective about startups that are focused on AI?
Yeah, I think I see so many AI startups on a daily basis now that it's hard to tell if we're in some type of bubble. It might be a pessimistic take, but but like we're obviously starting to see AI for and then put in any industry. Same as 10 years ago when we saw Uber for any industry, the 10 years before that when we saw the .com for any
Mm,
industry. Um, I do think there's a lot of AI companies out there that might be like successful businesses, and might be at their peak doing 1 to 2 million in revenue a year, but are never going to become another OpenAI, right? And so I think a lot of those types of startups are receiving funding, and um, it's scary to look down the next 2 to 3 years and think, are a lot of these AI companies that are essentially glorified features gonna still be around? Are they really gonna take off like the way people say they are? I think we've had more of a focus toward infrastructure, so going one layer deeper and saying, are they owning the data, the content that's being trained? Um, are they able to sell that out to these other companies that are basically doing AI for XYZ purpose? I think that's been more important for us in terms of like basically investing in more the infrastructure layer versus a lot of these consumer applications that can grow really quickly. But in the age of AI, things change so quickly that someone else will come around in a few weeks, maybe build something similar with a cleaner looking like user interface, and then take half the market because of that.
right, right.
So yeah, I think to sum that up to what's more interesting for us if we are doing it at that consumer level is really the taste and the UI UX experience too, right? Like I think that plays a much larger role now versus the technology, which at the end of the day is kind of becoming a commodity.
Got it. Got it. Along, as we're talking about AI, and you mentioned earlier that you've definitely had some experience with not just pitch deck creation, but obviously you go through your fair share of pitch decks. This is definitely a question that's being raised in education in particular. Um, but thoughts about founders using AI to create pitch decks, and is that changing the role of pitch decks when it comes to the fundraising process?
I mean, I don't want to hate on them because I've used them too. So I totally understand the use case. And I honestly like I look at so many pitch decks at this point that a good pitch deck versus a bad pitch deck doesn't really matter to me.
Mhm.
This might be contrary to what some people think, but like when you're looking at this many decks at a certain point, I'm actually concerned if it looks too pretty and too beautiful because it's like how much time did you spend on this versus working on the product? Not to say that that's where my mind actually goes, but like, if you're looking at it surface level, I think pitch deck quality just really doesn't matter too much in this day and age. You can make a beautiful looking pitch deck with AI, and if you don't have good design skills, like just do it. I don't think it matters too much as long as the content in there isn't AI generated. I don't have a huge issue with it. It's great for first impressions, but past that, I'd even say kind of like I have a lot of startups that will send me like their investor blurb, right? Including some of their traction, the one or two liner, the founding team, just like very high level information in an email. A good one of those blurbs, I think, is way more important than a good deck because I can send that around to other investors and just look at the numbers for what they are. Um, there's also a lot of great companies out there that have really shitty decks, and you almost don't notice unless you start looking at the numbers and you're like, okay, wait, this they're gonna like close their round really quickly. It doesn't even matter if the deck looks nice. So sometimes it's helpful just to have a good email because it helps you just not go in with any bias.
Got it. Got it. So we're getting close to time, but I wanted to ask you any final words of advice for founders building companies today, and in particular who are looking to fundraise today?
Um, I think biggest piece of advice, and this is just coming from someone that wants to do more deals, is like go validate the idea. Don't worry about like even customer surveys. Don't worry about um who you think is gonna buy it. Just like if you can launch it tomorrow and get five people paying for it, like that's what I like to see the most is just people that understand the business side of it too. Understand, I think we were talking earlier about like pricing strategy, like having a pricing strategy very early on that makes sense, and you can change that early on too. But um, I think a lot of founders probably put too much thought into um, how the product is going to look before they find out if anyone wants to buy it. Um, Also, if you're working in AI, my other piece of advice would be really if you care about like the impact you're making on the world, really take a step back and think about whether your product is doing that or not.
Mm.
Um, I yeah, I've seen some startup founders, for example, that are working on companies with like AI created personas for social media that have told me that they want to make a good impact in the world, and those types of things don't really click for me. So I think just take a step back and be very honest with yourself about what you're doing. You don't have to be making a great impact to get investment dollars, but don't sell yourself as that if objectively that's not exactly the case.
Yeah. No, that's some really great advice, and hopefully people will take you up on that. So, Kevin, just want to say thank you again for taking the time, sharing some of your experiences, some fun stories as well from some of the founders that you've come across, and obviously some great advice as well. So, thank you again for joining us.
Thank you, Ed. Always happy to chat. And then I guess for anyone else that's watching too, if they want to reach out, feel free. You can reach me on LinkedIn at just Kayon Moshiri. I'm pretty responsive there. And the rest of the plug and play team is. There's about 600 of us, so you can't really go wrong reaching out to any of them.